corporates and stock market experts with us, but let's straight away get to to the Dabur India gentleman who will be with us in a minute. This is very important news coming from Parliament that there will be an assurance that there will be calm business from here on. Mr. Sunil Dugal, CEO of Dabur India, is with us. Mr. Dugal, what is your initial reaction? Are you expecting that this is going to be a fruitful session? Would you look at the government and action from the government a little more positively?
I think it will be a fruitful session, and we certainly hope it will be. The FDI retail perhaps will be passed during this session, and we welcome it. Generally speaking, we believe it will significantly lubricate the whole supply chain, bring down cost, and be a big tool in fighting inflation. We also believe that there will be adequate amount of safeguards for local industry so that they won't be penalized as a consequence.
Okay, how are you yourself looking at this rule in some fashion? Are you speaking to anyone at all? How is this personally impacting the FDI in retail?
I think it will just improve demand, facilitate new product initiatives, and overall give better value, deliver better value to the customer. So we would welcome it from that perspective. I don't think there's any huge impact on FMCG per se. Our distribution systems are already in place, but it would be definitely to the benefit of the industry.
Well, we have some comments coming in from Sushma Swaraj of the BJP also, who is assuring that the House, that Parliament will function smoothly as well. But Mr. Dugal, just actually wanted to focus on the company itself. There are reports indicating that you all have lost market share in the hair oil division at this point in time. Just give us a sense in terms of what your current market share stands at, and what sort of competitive intensity are you seeing? Hence, what are the dynamics that could play out?
Well, there's been some loss in volume market share. I think the value share loss has been fairly muted. The reason for that is very intense competition at very low price points. Having said that, our growth in the hair oil segment have been very satisfactory, the perfumed hair oil segments in particularly. So we've been growing in the mid to high teens, so some loss in market share does not really impact us because our profit delivery has been maintained and accelerated. So I think we believe that this disruptive competition generally tends to play out over a period of time, and we do have some temporarily loss of shares which we can regain. So it doesn't bother us very much. We are pretty much in control of the situation, and we look forward to regaining our share in the months and quarters ahead.
The other point, Mr. Dugal, was that maybe you all will be actually looking to expand your portfolio via an inorganic route within the hair oil division. There are unconfirmed reports doing the rounds. Would that be on the cards at all, and would that be something that you all would be contemplating seriously in order to grow your market share?
Well, we will certainly look at opportunities within the hair oil space and also within the larger ambit of HPC and personal care. Having said that, there's no target which seems to be at this moment on the table and available to us. So I think it's very speculative, some of the news reports which went around. I know that we were quoted as saying that we are close to clinching a deal, but let me tell you that there is no substance to that. But if there's something which comes along the road in the future, we would certainly take a look at it. But in the interim, we are very busy developing our own hair oil initiatives. We've launched a hair oil last year. We'll be launching another one this year. And we'll continue to invest in this category. The Amla hair oil, which is one of our larger brands, has been completely revamped and refurbished. And the growth in this category, like I said earlier, has been pretty sparse.
Okay, give us an idea of how international business is doing, Mr. Dugal. I mean, how are revenues panning out over there, and which are the regions that are showing promise and worries?
I think the emerging markets are generally showing good promise. The MENA region is continuing its very high growth trajectory. The margin profile has improved there considerably over what we saw last year. Sub-Saharan Africa is growing at a good pace. I think the only area of some concern is the US market, which is not really growing at the pace which we hoped it might. But having said that, it matches the overall growth of the US economy. And that's something which we'll have to deal with. So the overall international business delivery would be perhaps superior to the India business, but not significantly so, unlike in the past.
Okay. How will prices pan out, realizations? Will you be able to, will you need to raise prices?
I think so, yes. I think the price increase this year has been much ahead of what we had anticipated 6-9 months ago, where we thought price increase will be very muted. 2, 3, 4%. It's already in the region of 5 to 6%, and we do see prices going up further. So the inflation scenario hasn't played out as well as we hoped it might. Inflation still is close to double digits and is impacting margins, so there's no alternative but to take up prices. As a consequence, the margin growth has been a little bit muted this year. It's definitely ahead of what we were last year, but it's not as good as what we had hoped to be. But the volume delivery seems to be good, and I think that's really the bright sign. So overall, the business momentum remains reasonably strong.
Okay, Mr. Duggal, actually I just wanted to extend that point forward. You spoke about volume briefly, and you've guided for a domestic volume growth of around 8 to 12% or within that range. Are you seeing any sort of contraction coming into demand at all within the domestic market? Hence, are you possibly going to scale down that 8 to 12% range, or are you going to be at the lower end? Just give us a sense in terms of the dynamics playing out in the domestic volume market, as well as in order to actually counter the competitive intensity at this point, are you increasing ad spends quite significantly?
I would still retain the 8 to 12% band. I think we are pretty much certain that we'll be in that band. Whether we'll be in the lower end of the band or whether we'll be able to crack double digits in volume growth still remains to be seen. We have still a quarter and a half ahead of us. Overall, the demand scene seems to be a little bit muted now as compared to where we were, say, 6 months ago. And I think the villain really has been inflation, which has impacted demand to some extent. We have mitigated that, and therefore the volume growth remains strong by aggressive distribution initiatives, particularly in the rural area. We've invested enormous amounts of money in expanding our last mile reach to the remotest corners of the country, and I think that has mitigated the lack of demand. So I would still say that the volume growth would be in the region of 10-odd%. Now, to your second question on the A&P spend, yes, they will remain high, and I think there are a lot of money which is going into new product initiatives. I mentioned the hair oil launch, which we are proposing in the next quarter, and there are a couple of other launches which are of a pretty high intensity. So they'll take up a lot of money, so the A&P spends would remain high, much higher than what we saw last year.
All right, we'll have to leave it at that. Mr. Duggal, thank you very much for joining us with your thoughts. Okay, while it's important that Mr. Duggal feels Dabur will be able to negotiate the slowdown, the important point he's telling us is that he does see demand a little muted. But at the moment, the markets are not listening to that kind of pessimism. There is euphoria, perhaps euphoria is strong, certainly optimism that some business will be conducted by Parliament. But let's see how the vote itself goes and how they're able to maneuver in the Rajya Sabha, where the government